everyone. Welcome, and we are very happy to have you here with us. Mariel Vince Rapisura, we call him Vince. He's the co-founder and president of SEDPI, Group of Social Enterprises. He received recognition as social entrepreneur from Ernst & Young and PricewaterhouseCoopers, and in promoting social investments from National Confederation of Cooperatives and the Home Development Mutual Fund. He's also a faculty member of the Ateneo de Manila University during the past 16 years.
So first, I'd like to thank the United Nations and the European Commission, and of course, the Small Enterprise Assistance Fund for organizing this webinar with SEDPI. Today, I will be presenting pro-poor financial services for women entrepreneurs from our on-ground experience, and then attempt to provide ways forward and recommendations that you or your organizations may want to collaborate with us. Let me introduce SEDPI, Group of Social Enterprises, and how it mobilizes social investments to fund its social enterprise initiatives in the Philippines and to Filipinos worldwide. The group is composed of 6 social enterprises that work in the fields of training, research, consulting, development finance, socialized housing, publications, advocacy, and rural banking. The first of which was established in 2004 and the latest edition in 2016 registered in Singapore. SEDPI, which stands for Social Enterprise Development Partnerships, Inc., provides capacity building services in the fields of microfinance, social entrepreneurship, financial literacy, pro-poor market development, disaster and climate change, and gender and development. Over the years, we have trained more than 50,000 micro-enterprises in the Philippines, consulting, mentoring, and training to 7,000 socially oriented organizations worldwide, and financial literacy to some 25,000 Filipino migrants in 27 countries. Through public bidding, we partner with government to implement various programs to support our mission to empower Filipinos. We were able to use public funds to provide capacity building services to cooperatives, agrarian reform beneficiaries, microfinance NGOs. This resulted in multiplier effects that led these organizations to reach hundreds of thousands of poor households. SEDPI also developed an operations manual for the National Confederation of Cooperatives that was replicated in 67 cooperatives nationwide. It also conducted due diligence audit for the Credit Guarantee Investment Facility of the Asian Development Bank when it supported the 80 million bond offer of ASA Philippines, one of the largest microfinance institutions in the Philippines. SEDPI implements microfinance and conducted rapid community assessment on the impact of COVID-19 to microenterprises and the informal sector. This is a series of weekly surveys that started last April 6 with almost 5,000 respondents each round. All respondents are SEDPI members who access financial services such as loans, savings, insurance, as well as financial literacy trainings. 95% are women who have collateral-free loans up to 20,000 pesos, payable in 6 months to finance their livelihoods such as sari-sari stores, karinderya, farmers, fisher folks, dressmaking, and vending. The loans bear an interest rate of 3.33% per month, which is comparable to credit card interest rates. Most of these women are married in households that have more than 5 household members and greater than 3 children. More than half of the women are the main breadwinners of the household, and 2 out of 3 women have husbands who also have source of income. On April 24, as high as 69% of microenterprises closed operations due to the community quarantine measures the government implemented. This went down to 28% on May 15. Conversely, most have difficulty financing their daily needs to sustain good living. Our members did the following coping mechanisms in the midst of the pandemic. 1 in 10 sold their assets at a lower value to convert this to cash. About half of them accessed loans, asked for help from the community, and dipped into their savings. Most are confident that their insurance coverage with SEDPI is enough to cover for sickness and funeral expenses. And lastly, everyone was able to access government assistance. On the second week of the general community quarantine, due to the COVID-19, only 13% of microenterprises experienced strong demand on their products and services. This is a slump from a hopeful 49% expecting stronger bounce back before the government ordered easing of community quarantine measures on May 1. There were 44% among microenterprises that expected weaker demand, but 78% of them actually experienced this in the same period. In contrast, 84% remain confident that access to supply for their livelihood won't be a problem. Almost all of SEDPI members were able to receive relief goods, and 8 in 10 were able to receive cash assistance from the government. Each household received 3,000 to 5,000 pesos. Members preferring to resume normal repayments remain compared to previous weeks. Less and less microenterprises are requesting to refinance their loans. SEDPI offers short-term loans that ranges from 3 to 6 months, and members are able to repay their loans quickly and could access repeat loans immediately. The apparent sluggish demand may have led microenterprises to rethink accessing more debt that may not be used for productive purposes. The cash assistance from government may also have afforded microenterprises some elbow room in managing their finances. Therefore, there is less need for restructuring and refinancing. Despite the weak demand, 71% of microenterprises are still confident to recover from the pandemic within 2 months if they have sufficient capital to restart their livelihoods. Emphasis on that. The amount of financing needed to restart ranged between 3,000 to 9,000 pesos. Less and less among microenterprises need relief goods. More and more are requesting for work to bounce back amidst the pandemic. The overwhelming preference is for cash assistance to be able to finance restarting their livelihood. SEDPI intends to implement the following microenterprise rebuilding and recovery strategies. These are cost plus and 0% loans, social safety nets, access to government welfare programs, financial inclusion and financial literacy, and mobilizing social investments versus debt-driven development programs. First, SEDPI will convert all its existing loan agreement with members to joint ventures. Loans that will be restructured into joint venture counterparts will bear 0 interest. Those needing refinancing will be charged with a service fee instead of interest. Instead of focusing on cash as asset, labor and participation is given more importance, a departure from traditional capitalism. Second, aside from providing capital to members, SEDPI will continue providing financial literacy trainings to them. Members contribute their labor and day-to-day operations to the joint venture. After paying the service fee, microenterprises get to keep all the profits of the microenterprise. This is our method of profit sharing and risk sharing. Third, we convert our members as mere borrowers to become true partners and agents of development. The pandemic will bring about hyper-localization, which will force local communities to boost agricultural production for food security. And SEDPI will be there to provide agri-enterprise opportunities to members that will augment their present livelihoods. We will continue providing social welfare protection through partnership with commercial insurance companies and implementing indigenous insurance practices such as Damayan and facilitate access to government safety net programs. Fourth, financial education will increase financial literacy of members. As seen in our comparative study, non-microfinance low-income households are almost twice as likely to sell assets in distress, almost 3 times less likely to have insurance coverage, and almost half less likely to access government assistance compared to our members. Lastly, we will continue mobilizing social investments from social investors who are mostly overseas Filipino workers. In 2019, we reached a milestone to have mobilized a total of $1 million through this strategy. SEDPI Development Finance issues preferred shares to SEDPI Social Enterprise Ventures, and the venture spells out equitable share risk sharing and profit sharing between social investors and SEDPI. In this system, SEDPI shares in the profits and losses of investments. Our model is really hinged on grassroots-led empowerment. SEDPI empowers migrant domestic workers abroad, and with this empowerment comes the ability to place social investments that SEDPI then uses to fund livelihoods of women microentrepreneurs in rural areas. The following are our recommendations to enable us to pivot towards the path of recovery and a better normal. For the government, we would like to reiterate our call for mass testing, a more aggressive and orderly contact tracing and isolation in conjunction with increasing healthcare capacity. Low-income groups should have priority in these efforts since they are more vulnerable. To jumpstart the local economy, cash assistance should be extended to microenterprises. Cash assistance is facilitated efficiently and effectively when low-income groups have bank accounts. So we call on the government to institutionalize financial inclusion that will make it a right for every Filipino to have basic savings account to access government welfare programs. We believe that this will reduce red tape, patronage politics, and corruption. Since government programs offer calamity loans that are charged against mandatory contributions, meaning it's the personal contribution of Filipinos, we urge that the government make this interest-free to alleviate the financial burden of low-income groups, especially during this time of pandemic. We believe these recommendations to government will contribute to an enabling fiscal and monetary environment that will benefit microenterprises and not just large businesses and corporations. In support of the microfinance industry, donor agencies can focus their resources to disaster response of the pandemic. They could also fund researches and provide guarantees to stimulate the economy. Wholesaler of funds, such as government financial institutions and commercial banks, should support microfinance institutions with 0% loans. Wholesalers that currently have existing exposure to microfinance institutions have the choice between facing ultimate default or share in the losses of MFIs now that could be recouped in later years. A better option is to temporarily convert debt to equity to eliminate the interest burden of cash flow challenges. This will enable focused efforts in the recovery and rebuilding of microenterprises rather than organizational financial sustainability. From 2004 to 2009, SEDPI focused on bootstrapping to finance its operations. In 2010 to 2016, it experienced boom in growth, largely due to external credit from commercial banks. However, a default in one of SEDPI's microfinance clients led to a loss that it solely absorbed while commercial banks still enjoyed repayments and interest income. This led us to decide on a major strategy from solely bearing the risk and cost interest through debt-driven growth and retool ourselves to focus more on equity through social investments. We are moving with this slowly and patiently. As you can see, in 5 years by 2025, we project to pay off all our commercial debts, and we intend to intensify social investment mobilization that will replace debt payments. However, the effect would be a more muted growth trajectory. For fund managers, we would like to emphasize that market-based solution is not the only strategy in addressing economic challenges. We may be in the early parts of a depression, expecting positive returns translate to high cost pressures on microenterprises who will ultimately bear the cost. And this would lead to a lot of defaults and more losses. We then invite you to consider profit and risk sharing mechanisms with MFIs beyond taking just a defensive stance to preserve capital. Guaranteeing social investments would be a good start. At the minimum, We hope that fund managers will package their funds to support capacity building and technical assistance, technology adoption, and research and development. In SEDPI's case, we hope that fund managers will package their, in SEDPI's case, we are open to fund managers and impact investors for capital infusion to reduce commercial debt and beef up equity. This could be in the form of a matching scheme where social investments mobilized from individuals are matched, or a guarantee mechanism such that social investors would be more comfortable investing in SEDPI. This has been done with CordAid, a Dutch international NGO, in 2008. Should this happen, SEDPI will be able to serve 1 million poor households in 2025 from its peak of 500,000 poor households in 2016. To sum up, we at SEDPI believe that primary stakeholders, in this case, microenterprises and the informal sector, should remain the center of our development agenda, especially in this time of pandemic. Market-based solutions should not only be the default solution we should employ, but integrate the social economy or the sharing economy. Lastly, we will emerge to a better normal through public, private, and civil society cooperation and partnership. So for those interested to support our initiatives, our contact details are presented and would be available from the UN Women's Secretariat as well. So thank you for listening, and I look forward to hearing your thoughts and answering your questions.
Thank you so much, Vince. Very clear points of opportunities and collaborations from different stakeholders. Very interesting. I have a question here from someone who's a member of a farmers cooperative. Can they avail of assistance as a group from SEDPI? Vince?
Yes.
Able to offer assistance to group of farmer cooperatives? Is this something you?
Yes, we are actually currently providing assistance to 35 agrarian reform beneficiary organizations, and most of them are cooperatives in 4 provinces in conflict areas in Mindanao. We are sharing our social welfare protection program scheme, where we combine the commercial insurance, our indigenous practice of damayan, and also the government accessing government safety nets through SSS and Pag-IBIG through small cooperatives. So yes, we are very, very open to working with the smaller organizations.
So they can reach out directly to you if they would want to explore that kind of partnership.
Yes, of course. In fact, just last week, one cooperative from Isabela asked for my assistance to dispose of about 20 tons of organic red rice. And I was able to get them to a wholesaler. And I think they're already on their way to delivery. So yes, definitely. Yeah.
Very interesting was your presentation about the respondents in your questionnaire, that they would rather have access to work instead of cash assistance, and that they would prefer to really have this cash assistance as something they can use to refinance their businesses. Where is that coming from? I mean, is that a general feeling of those who are at the, supporting micro enterprises?
No, I think the research says that cash assistance is still preferred if they want to bounce back. But in terms of existing loans that they have, they would I think they are more risk averse to take on more loans at this time, especially that they are experiencing slower growth in demand in terms of sales and in terms of their operations. And this I think is a proof that micro enterprises, especially the low income groups, are really risk averse, and they know how to calculate risks. So if the cash assistance would be coming from the government to jumpstart their livelihoods, then they would be very open to that. But in terms of accepting more loans to jumpstart their livelihood, I think they would rather work on what they have now rather than add additional burden of paying interest on the loans that they will be getting. So I think if it's going to be a 0% interest loan that will be extended to them, then they would be able to absorb that more.
Yes, thank you for that clarification, Vince. A question from Boots: will you be able to fund startups, particularly by women who were displaced or those who lost their employment because of the pandemic? Is this
Okay.
something you're willing to invest in, Vince?
Uh, if I have the cash, I would. But unfortunately, our cash chest is barely enough to cover the funding requirements of our existing members. And I hear a lot of micro enterprises really asking for more cash assistance. And that is the reason why in our social media platforms, we have begun promoting social enterprises for investment so that social investors can invest in these social enterprises through us or directly. So this is one thing that we have experimented on during the start of even before the start of the pandemic. But it took off really well during the lockdowns because most overseas Filipino workers heard about this and they started investing. But these ones are for the existing social enterprises and the microfinance clients that we have. We have yet to create a program for startup women-led enterprises. But yes, definitely, that could be something that we could open.
Yeah, we look forward to discussing that with you. Another question from Kamya. Are you able to extend your services to organizations even without SEC registration papers?
Okay. Without SEC registration papers, if you are borrowing money which is greater than 20,000 pesos, is not okay. So that's our policy. If you are already borrowing money, or if you are going to ask for capital from us, and you would need more than 20,000 pesos, and then registration is really needed.
Okay. Any other questions from our participants? Yeah, so I think we could now open the floor to questions both for Winnie and Vince. We have around 10 minutes for this kind of questions for CIF and SEDPI. Could I? Yeah, given the situation, I know that really women are badly hit, especially those who are starting with their businesses and with their livelihood opportunities. What could really be the best preparation for them so they can move and go beyond, tackling all of the issues that they have at the moment? How can they prepare better, or how they can improve the kind of setup or the business that they have at the moment? For Winnie and Vince, yeah, tips.
Okay, I'll try to answer that first. Really, the reality is a lot of the preparations should have happened before the pandemic. So if we are already just responding to a lot of the risks that we are facing, if we are just going to think of the solutions. And now, of course, we understand the magnitude of the pandemic is really so huge, and nobody was really prepared to take this head on. But in the current scenario, micro enterprises in particular, in my observation, they are very resilient. And why is that? Most of the micro enterprises that we work with are in the rural areas. And in the rural areas, physical distancing is natural. I mean, you know what I mean by that. The distancing is already there. And then with the hyper localization that I was mentioning about a while ago, that there would be a strong demand for products and services that are produced within the community themselves, there would be a lot of opportunity for micro enterprises to fill this demand. So if they would be able to retool or re-strategize their current operations to be able to address the incoming demand, no, that will be that we anticipate, then there would be a business case for them. If they would insist on their original business formula, I think that is a formula to failure. Now is the time really to think ahead and to think of adapting to what we call in SEDPI we call the better normal rather than the new normal.
Thanks, Vince. Winnie, from your end?
I agree with Vince. It's agility is the name of the game. These days, we have tools like what I have mentioned in my presentations of businesses had to respond to the current opportunities, current needs of the population is, would come out very successful in this situation. But also it is important to know what your financial position at all times. I think that's, in preparation for situations like, economic shocks like this, it's very important to know your financial position, what resources you have and how to conserve those resources. At the same time, creating a buffer fund for situations like this. So since we are here now, I suppose that one of the immediate needs to work on is actually try to conserve the cash, because we don't know how long this will take. Avail of those government programs to help you through this. At the same time, cooperate or collaborate with your employees, with your stakeholders, with your customers, in order for them to know what the real situation is. And we are all in this together, and we have to solve this together as a team. So in essence, it's basically being agile, knowing your financial position and resources and conserving those resources, and resorting to the government programs that are available to help you through this period.
Yeah. When you say conserving or preserving,
I have a question for.
Sorry.
Yeah.
Yes?
After you, Len, I have a question for Winnie.
For Winnie? Okay. No, I think you could ask the question for Winnie now.
Okay. Yeah, Winnie, because I have been mentioning about our need for 0% loans at the minimum, and this advocacy for profit sharing and loss sharing. Are these two concepts you think acceptable at the level of SEEF? And how would other fund managers and impact investors address this?
Okay. Traditionally, we haven't really invested in financial intermediaries. So this is a totally new ballgame for us. But what I've been trying to do, like, I've been discussing with you your concerns, and I'm taking it back to our management team and addressing your concerns in the structuring of our facility. So at this point, because we are still in the early stages, what I can say is that, look, I understand the concerns and the challenges, but let me have that discussion internally and see how we can address it.
Okay. Then you take the discussion later forward after. But I have a question linked to cash flow management. I think a lot of the businesses at the moment are having issues with their cash. And hearing both of you say that you need to, as much as possible, preserve the cash that you have. Would that mean withholding payments for all transactions that you have done in the past, or how would you go about that if that would also have an impact to those who are supplying you with their goods, but you need to hold on to that cash? What would be a good, I don't know if it's a win-win scenario, what would be a good balance to tackle that issue or problem?
Well, I think it all boils down to how well you negotiate with your existing business partners, your suppliers, and even your customers. No? Even actually your employees, because a large part of cash cash outflow is really your payroll, right? So I hear that a lot of, in our industry, in the microfinance industry, I heard that they've already instituted like revolving rotation schedules, shifting schedules, so that everyone would have a chance to have partial salaries. And also they're listing down priorities, no? For example, are utilities priorities our priority now, or rental repayments priority now? You have to evaluate that based on case-to-case basis of your enterprise.
Yeah. Thanks, Vince. Winnie, from your end, do you have any other additional? Yeah.
So I think it really depends on the relationship that you have with those suppliers, with your employees. You have to balance it. Of course, they are in the same situation as you are. So you need to apply the same standards in terms of how you want to be treated. So it's really now is the time to have a close engagement with those stakeholders to be able to give some, take some on concessions.
Yeah, I think in this time, it really is important, the relationship and how you would really communicate very well with your suppliers and with your team as you move along in this pandemic. Final question before we really say goodbye to our participants. We have last question from Mr. Edwin Salonga. What can you suggest for the government and non-government institutions to ensure that women micro-enterprises are assisted in this time of crisis? So, suggestion for government and non-government institutions. Vince?
I was actually thinking of what to answer. Maybe Winnie can go ahead first.
I think it has to do with policy. Like UN Women would be a major influence on government policy. So we have to monitor the women economic empowerment through sex disaggregated data, and show them the effect of interventions, and I would think once they see tangible benefits, they would certainly act on it, I hope.
So more business cases for us. Yes, Vince, please.
I'm interested to answer the question of Georgie, and she's asking how would it work if a social investor invests, and how much of equity control do they want? Well, usually in our case, the design that we have in our social investments, the social investors go into a joint venture, but they really don't get control over the enterprise that we are supporting. So we are just there to support them in terms of funding, in terms of market linkaging, cleaning up their finances, linking them to other networks. But in terms of control, it doesn't really happen that way. So that's as far as how social investments are treated here in SEDPI.
Okay, thank you. Winnie, very quick, if you would have a chance to answer, 50-50 ownership or be qualified, will 50% suffice in terms of those who can access the facility you will be offering?
Oh, what does that mean? Are we looking at 50% stake in the company, or?
Okay, where is the question? Okay, maybe we'll go back. We'll try to send you the question and send it back to our participant.
Okay, we can clarify.
Yeah, because it's almost time. Final notes or final message to our listeners, especially those who are starting or thinking about how to revive or how to survive their businesses at this time.
Yeah, for me, I think we're facing extraordinary times, and because it's extraordinary, the response to it should also be extraordinary. Things that we have, and I also believe that things that we were delaying to implement in terms of innovations in the past, the pandemic provides us an opportunity to really fast track and accelerate this implementation. So as in our case, we were really planning to veer away from interest-based loans in the past to achieve it by next year. But with the pandemic, it gave us the opportunity to really come to it and see it into fruition. So, of course, there's really a lot of challenges that we need to face, but there's no choice for us but to hold on to ourselves and hold on to others as well as we move forward and address all of these challenges.
Thanks, Vince. How about you, Winnie?
Yeah, I think you have to just, believe in yourself, connect with other people, learn from them, collaborate. So those are, like Vince said, these are extraordinary times, unprecedented. We need to learn from each other on how to address this and, just keep a very positive frame of mind.
Thank you so much. So yes, connect is what we hope to do, at least for this time. The UN Women We Empower Asia would like to really open up the spaces for everyone to connect on different topics and on different levels. It's an opportunity to share information, to really learn from experts, and also be part of our consultation to sense where we see we could really help. Like I hear Winnie saying that there's an opportunity for us to go into reviewing policies, how we can make those more gender sensitive or gender responsive, especially for the women-led and women-owned enterprises. And we hope to really work with different partners and collaborators moving forward. And I'm very happy to have Vince and Winnie say yes to co-hosting the discussion around all of this concerns linked to access to funds and financing. We are also opening up other discussion series. On next Friday, we will be discussing older women and how the vulnerabilities and their insecurities are highlighted during this pandemic. And we would like to invite everyone who's interested to be part of that conversation. So as I mentioned earlier, this will really be a series of different themes and topics when it comes to concerns that are being surfaced or that are surfacing at the moment. And there are more to come, and we will be sharing with you final dates and invites as we have finalized or as we have engaged all the other partners moving this forward. I think that's how we would end it, and we would like to thank again Vince and Winnie for your time and for your sharing. We would be sending all of the presentations to everyone in this forum, and we again would like to request you to fill up our post-webinar survey form so we can improve and also refine further our way of doing this moving forward. With that, I hope everyone, you keep safe and well and healthy. Thank you so much and have a wonderful afternoon.
Okay, thank you.
Thank you. Bye, everyone.